The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi, folks. Basil Chapman sitting in for Larry Pesavento. I usually do the opening. I usually do the Monday, Wednesday, Friday Tiger Technicians Hour. And lately I've been, as much as I can, I'm trying to fill in for Larry. And I'm here today in the hour that's called Trade What You See by Larry Pesavento. And don't forget, go to Tiger, the front page of Tiger. Maybe not right now if you go Tiger on Mobi, if you're looking at the charts, because it's very important. We want to be looking at charts right now. I'm going to be showing charts. We have someone waiting in line for my show just in the last hour, who we were going to follow up on the call on AT&T. T is the symbol. Very important stock making highs here. But go to the front page at some point real soon, because you want to check out the Tiger vouchers. You know, you got the Tiger dollars. This is an amazing one, because if you spend $500, if you're a subscriber to one of our newsletters, my newsletter is called The Opening Call, very detailed daily report. Just as I discussed here, I showed the charts. I got it right here. In fact, already, look, this is what I do every day. In this case, I showed the inversion of the Dow with a white background so it can be printed out, where it's upside down and back to front. And it gives you a lot of information. It says there's that cup formation. If you break down, you can go much below, but you're going to come back, retest the base. And we've just done it. And I explain in this particular little paragraph there exactly what we've been looking at. And I say, Fed, Schmed, Bones, Schmons. I don't care what it is. At this particular point, we're at an inflection point, because we're at resistance points all over the show. And this is the most vulnerable period we have to some kind of a pullback. It might be time and price. What's going to be needed, and I don't know how it's going to do it, because the Apple chart looks terrible. Made a peak F top in the Chapman wave. I'll explain that in a moment. But we can break out, and it has to break out decisively. The Dow has to be up in the 13,400s by Friday afternoon at 4 o'clock, not in the 13,020s to the 12,900s if there's real bad news. But even on the bad news, the way I'm looking at GE and IBM and some of these stocks, there's support there. The way I'm looking at others, there is no support for some of these stocks, which are extremely overbought and need a digestive period. That's why I'm talking about a split personality, where you've got stocks that you want to be buying long, and you want to be buying stocks that are short. You want to get out of stocks that I just noticed a few moments ago, it was pointed out to me, momentum stocks like a Panera, which is always a favorite, on the long side, and then it just took a huge hit. And now look at it. It's at 167 to 168. Just a couple of days ago, it was trading in the 100 and low 150s. We were short. We took a 1-point loss because I expected that the dreaded H pattern, which turns into an M, the same repetitive patterns that we've been seeing, had a chance to go one more time to the downside. And if it did break, it would break sharp. But I put a tight stop. Why? Because at 156.51, if it went over 158, so we had a 157.51 stop, buy stop, that 1 point is not even a percent, it's like a 0.8% or something, it's nothing. Said to me, be careful, because if it breaks out, the momentum stock could just garner energy, and look what it is. It's almost, it's making new highs as we speak. Unbelievable. One unbelievable stock. Panera Bread. So we all do different things. Larry does a newsletter. I do a newsletter. Tom, Steve, Ken. Who am I missing? We've got Dave. I'm missing somebody here. Oh, and we've got Kate. So we do newsletters here. It's really important that you consider this, because if you spend $500, you get a 20% discount. You get $600 worth of Tiger points. You spend $800, you get 1,000. 25%. Hey, wait a minute. You get 30% if you spend $1,150. You get $1,500. That is huge, because after September 16th, rates they'll drop. You'll only be able to get 10, 15, and 20% on your Tiger dollars. Think about it. It's a great, especially if you love our work and you want to continue. This is just a great time to add to those dollars. They're just there for life. You can keep them, so you can just use them whenever you want. So I find not only that, I'm doing a Master Trader series come October, somewhere around the first week, second week of October, and you might be considering a real big discounts on something like 2-day live workshop, like 8 hours a day. What is it? 8:30 in the morning till about 5. I mean, we're talking time. All right, folks, now let's go back to the story. We've got on the line, Ken Trivia. That's what I said, Ken as well. On the line, we've got, let me go back. It's Max in Tri-Cities. Hi, hey, Max, you still there? Yes,
yeah,
good.
I'm still here.
Now, this is what's so important. There's a thing called the double top, where it goes from the left side, it pulls back, and then it goes and it retests the previous high, the lip of the left side, especially if it's a cup formation. And that's where you've got to be very careful, because you want one of two things to happen if you're bullish. You want it to power higher. In this case, it would go above 38.28, go well above it. It would probably go to like 38.75. Straight out, it mustn't stop. It can stop underneath for just a little bit, but it can't go down too deep. It can't go under 37.33 or close under 37.33. But if it holds here and then has a power move through the resistance, that says, yes, now you've got a Chapman wave cup and ladle, which is a great breakout pattern. It says, yes, you could pull back, but there's a real good chance that you're going to be able to. It shouldn't just gap down. It should very gently come down and should retest the lip of 38.28, and then it can come back because it's raised the stop. If it fails here, well, I should say it raised the base, because if it fails here in leg D and then pulls back and the stochastics at 83%, the MACD's good but not great, it says, whoa. Now, you're looking at Tiger TV, right? If you look at the high it was made at 38.28 on the 1st of August, that's when the general market made its high. Isn't it funny how it's matching what the market's doing? And yes, the Dow testing just broke its previous high. Telephone hasn't yet, but it's the same time frame. Now look at this. The MACD and stochastic were huge. The stochastic was at, I think it was 96. Whoops, cancel. Well, I think the stochastic was at 96%. Let me just get that. Stochastic on the first, right there. The stochastic was at 92%. Well, right now it's testing the high range. It's at 38.11. It's just 18 cents off then. Stochastic is holding very nicely at 83%. But that's 10% lower than it was, and the MACD, you can see, is just turning positive. So in assessing what I'm looking at, I'm saying that the technicals are confirming, but they're not quite as strong as they were at the previous high. So far, it's not a negative. It's to say it's a potential negative if there's a pullback, and that pullback takes AT&T below 37. Now let's look at the weekly chart. Same sort of things happening here. The previous high back in August, the week of August the 3rd, that was the 1st of August, but the week of the 3rd said, okay, I've made a new high. MACD and stochastic were very good. On balance, volume now is much lower. Stochastic's much lower. And the MACD is just flattening out. The red line and the yellow line are actually touching. So that says, this doesn't have quite the same power. But I haven't got any signals yet to say that I've got a sell signal. Now, the monthly, and that's really what you're talking about, because you're in the December contract, correct?
Correct.
Okay. So, folks, let me just recap for those who are just tuning in now to Larry's show and have got me. I do the Chapman Wave methodology. My name is Basil Chapman. It's a methodology that says from a most identifiable low bar, you should go to at least 4 peaks higher to a peak D. If the technicals are still strong, you might have a little bit of a consolidation, but then other things can take place. You can have a parallel wave count going to an E and maybe an F, and then have a pullback. Or you can recycle up and go to a D and even an E, and that's exactly what happened when the low bar, the most identified low bar of September, a year ago, exactly, almost to the week, September the 16th of 2011, 27.29 was the low, and it went to peak A, B, C, D, 4 higher peaks at 30.68 in January, the week of the 6th of January of this year. It went to 30.68 and then pulls back to the 200 period moving average. If you were listening to what I was talking about when I spoke about the euro, and I said the euro is just broken above the 200 period moving average, but the euro can act as a magnet for a long time. Look how it acted as a magnet line, like a sine wave, up and down until it really broke out back in December of last year. So that held beautifully on the pullback into February of this year, and then it went peak A, B, C, D to E, and now we're doing this little double top formation. So the question is for you, what do I see that indicates that AT&T, T is the stock, the symbol that we're looking at 37.84, up 22 cents, has the capacity to at least retest the most important left side previous high bar of May of 2008 at 40.70, which doesn't sound like it's far away. It's only 3 points, 10%, but it could be quite a challenge to get there if certain things happen. So here's what I'm looking at. If AT&T by Friday afternoon is not underneath $37.20 or $37, but in fact is held towards a $37.70, $38.10 new recovery high, that I would say that would be really good, good price action. Why? Because what it would say is that the weekly chart that we're looking at, let me just move this over there, the weekly chart has at least got a high-level consolidation with a potential cup and ladle forming if it isn't able to snap right into the upside, but that gives you time to think about everything. Of course, your premium will shrink a little bit, but really not very much if it's in this little tiny trading range of a point and a half. Now, what would be negative? Negative would be is if it slides, it takes out the low, the most important low of 36.43 of the 24th of August, and instead of bouncing back again quickly to the 37s, it goes into that very strong candle, the wick of the candle, which opened at 34.98, has a low of 34.24, the candle of the 27th of August. So to me, it's really clear. You've got parameters you can watch, and the reason why I want to talk about it is because you've got these calls which will shrink in premium. But the thing is, I've got to say to myself, wait a minute, what would happen if it pulled back, you still held those calls, and then it went on to a new recovery high? How could I justify that? Well, this is the way I would justify it. I would say to you that if AT&T gets to 38.74, some part of your position, we can talk about it again later next week if there's chance, but some part of your position you might want to consider putting a trading stop, however you want to do it in the way you do it in the option complex. So, because this is a peak C that's being made if there's no new high above 38.28 in September. If there is a new high, besides being a beautiful sandwich pattern, I don't know how to explain that. Let me do this. If you're looking at Tiger TV, there's a particular chart pattern. I haven't even written it down in my notebook, but it's got a huge green candle, then a huge red candle, and the very next candle is a huge green candle and positive because it closes at the highs. That says that momentary period was just a digestive period, and it's going to go even higher. So I love your trade. I'd just be a little careful if it closed under, say, 35.60. I'd get 37.20 to 36.80. I say just be a little careful and watch it more closely.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Just making a quick change here. There you go. Okay. Finally I got it. I thought there was something wrong. All right. But we've got, still on the line, we've got Max. Max, you still there?
Yeah, and so what were you saying, where is it at currently, do you think, in the Chapman wave? Is it you said a peak C, or where does it stand up in the wave count, do you think?
In the monthly chart, and this is the thing that's really quite spectacular, it's either in leg C or F. There's a parallel wave count if I continue, because the MACD did not go negative, even though I got a down arrow and I got an up arrow. Technically, I'm calling this, and what's so beautiful about the Chapman wave is that there are many times where you don't have to make it. I don't have to make a decision whether it's an F or a C, because the stochastic and the MACD in the monthly chart are still really strong, folks. We're looking at T. This is AT&T. 3783 is the where it's at right now, up 21 cents. We're looking at a monthly chart. Now, my monthly chart says that the previous high between 40.70 and 41.94 has a left side, right side price time match. There's a particular technique that I have, which says by November of this year, it should be testing that area. But I like to go step by step. That's a monthly chart. Anything can happen in the daily and the weekly before then. But so far, there is nothing to say. I don't have any evidence right now, which is the first, this is the second week of the month. In the second week of the month right now, to say that there's a negative aspect to it. Everything so far is positive. It even has a higher low bar this month than last month, which was a low of 36.43, and now the low is 36.54. So if it even just sneaks above 38.28 once to go to 38.29, that's last month's high, that extends That's this floating ladder that I talk about in the Chapman wave. That extends leg F/C. If, in fact, there's no new high in September, in fact, we close underneath 34.74, the 9-period moving average, that's something altogether different. Then I have to consider if the stochastic's pulling back sharply, it's at 94%. It'll take a lot to get it down under 80%. But if it does, then I have to consider it's made an alternate wave count, and that's going to be a peak F. I just don't have that signal right now. So far, everything looks good to go. I like it. So I think you're in a fabulous trade in terms of risk reward. My only concern is it's a long time between now and it's December, you said, right?
It is, yeah. And actually I wanted to give myself that breathing room because I was looking at that. My target was 42.50.
That's near the old high, right?
Yeah, it was what I was shooting for. I've got a contingency sell in at about 36.90. Do you think that's giving it too much room?
Oh, 36.90. That means you'd switch your position, correct?
Sorry, 36.39. I would exit the position at...
yes.
My stop is 36.39. Is that too much room on the downside?
I would say that I would start taking some of it off. 36.43. Yeah, you and I are on the same wavelength. Yeah. But I tell you what I would do. I'd have the little bit of patience. It might cost you, but I would wait the full day to see if it does that. That is, don't do it intraday, because intraday you could pull back below it, stop you out, and then just bounce back. There are a lot of people that want the stock because it offers capital appreciation potential, and it gives you a good dividend. So not you, but for folks who want it in the long position and money and mutual funds. So hey, great position. I think you've done very nicely. For my eye, I'm looking at some kind of a pullback. I suspect that you're going to have one moment where you're going to have to make a decision, but at this particular point, I would not be surprised if it pops to the 38.40s before it hits the 36.60s. So great position, and try Victor Jones as well, who does the option hour on Tuesday. He's fabulous. So he might give you another perspective, but that's mine for right now.
Thanks, Basil.
Thank you so much for calling. Thank you for holding. So we've got, let's see, did I have another caller that I've forgotten about? No. Okay, but I did have questions in the debt. Now, this is what I wanted to do, because it's Larry Trade What You See, and he does futures mostly that he's looking at. Tomorrow will be the futures hour, but let me just show you something. I was talking about the TFU. We should go to the Z, but I'm going to make it the U. This is the IWM shares. This is the Russell 2000 mini contract, 2000 September. I could go to December, but I've got this all notated. It too is in leg D. It too, Rutus. So what we're looking at here is a situation where I don't have a sell signal, and it might even be that there's a false signal tomorrow where we suddenly pull back, but by Friday afternoon, Monday, it starts to heal itself. So I have great specificity in what I'm looking at and what I'm telling my subscribers. This is what we want to see. Now, I'd spoken about momentum stocks a moment ago. I would not be surprised if... I'll talk about it as soon as we get back. I don't want to go through talk into the break as I did before. We'll be right back. Basil Chapman, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Hi, folks. We're back. I got a message in the den. Mitch from Boston said PNRA goodbye. Goodbye instead of Goodbuy. But it's breaking out in this cup formation. In fact, look, formations repeat over and over again. Look at the way, and this is the reason why I was talking about it, I think in my show, where we were short, we took a 1-point loss in a $156 stock. Why? Because I did not want it if it broke above the cup formation, the arch formation with the third arch. Because if it does that, above 160 round number high, that could really fly. So it's exactly what happened. And this is a momentum play. This is what you got to be. This is what being short. You got to be so careful to put your stops in nice. You just got to have your stops and be ready. You can always come back. Don't sit with things. And I'll tell you why. Because when the momentum players come back to their old favorites, look at VMware. I bet it's moving today. VMware. Yeah, there it is, up $1.45 and 97.93. The old favorites, CRM, I bet that's doing okay. Yep, there it is. Those old favorites, momentum traders, they just come right back in. They feel, I got to make that money up, and they push. Shorts. Oh, okay. What he says is the shorts lost it. Okay, yeah. No, I agree. If anyone was still short, that would be terrible. So, yeah, absolutely, I agree. Now, what we're looking at here, I brought that up because it was a question then. Remember, I just said patterns repeat. Look at this one. I called it it's like a galleon. I don't know how to explain these things. This is the E-mini futures, the 120-minute chart. September. I'm still in September. There was a pattern that I showed my subscribers every morning. Besides all the other stuff I do, I also show the E-mini 10-minute and 120-minute chart. And the reason why I do it is because they trade almost 24 hours a day. So that's saying to you, this is what's been going on while you were sleeping or away from your computer. I want to know that. And what happened is there was this beautiful cup formation, kept hitting the 1395, 94 area, and then broke out in a left side, right side price time match. You're going to get used to my expression, left side, right side price time match. Earlier, went to a peak D, E, and then an F. And then it made that I was looking for the word. You know how a pirate ship has that long post that sticks out in the pirate ship? They have the mermaid, that whole thing in the front of it. Well, this is what it looked like to me, that it had that. And now look what's happened. Yes, Danny in Atlanta, I have talked about Apple. I'll go through it again in a moment. You've come back, made a V-shaped recovery. Now, I said earlier that V-shaped recoveries, you've got to smash through, make a new recovery and hold up there. And that's really positive. Cup formation has the cup and ladle pattern like that, but V-shapes very often are even more powerful, but not when the MACD and stochastic are fading. And that says to me, this whole area of 1437 to 1441 is going to be strong resistance to power up against, or you would see the pattern, and this takes me back to chart patterns. We were looking at, what were we looking at here? That's the only reason I got to this is we were looking at a chart that had a pattern that reminded me, PNRA. Yeah, there's that galleon again. You see, that's that beautiful long bowl formation. I didn't want to see it break out, because if it broke out above that previous arch high, that would say 164, the round number high would be the thing to watch. Well, it smashed through that today. This is just short covering. Well, it's not just short covering, maybe the new buyers, but this is definitely at all-time highs, and it's a breakout. And there's that pattern. So what does it say? I'll draw it for you, and we'll follow it into next week. This is what I'm looking at, and it should come back, and then you might get another bounce. So that's the pattern we're looking at, that it could go into the 173 area. There's a 168.99 is the high. It could go there, but it's already broken out. So at any point from here, it should, no, I'm going to make this lower. At any point from here, it should start the curve over and retest the middle of this bar. So those are how patterns repeat. Now, I wanted to get rid of that chart, and because this is Larry's show, although he's not here, I want to show you something, because Larry loves to look at historical stuff. So I get an email today, one of those junk mail things. But I always glance at the heading, because sometimes it gives me a good clue as to what's going on, what people are thinking. And what does it say? It says, is this the one? Yeah, 3 fiscal storms brewing and explained. And this is about a guy, Leon Lebrec, who's been talking about, this is not him, this is somebody explaining what he's talking about. And I don't know this guy. I mean, he could be fantastic for all I know. But what he says is, in 1942, this is a quote. We are sailing off the edge in 2012. Historically, we are facing the biggest tax increase in absolute dollars ever. At 5% of GDP, it is also the biggest tax increase spending cut in relative terms since 1942. It is possible we have a triad of storms for the remainder of 2012, with a storm of the century hitting on the exact dates of December the 31st, 2012 and January the 1st, 2013. Hey, this guy could be 100% correct. I have no idea, but it always stimulates my mind. That's the way my mind works. I say, hey, 1942, I know my charts. I've done a daily chart. Dozens of times I've had to redo this chart of the daily of the Dow from 1929. I know those charts. I don't know them backwards and forwards, but I know them forwards and a little bit backwards. So I quickly go to 1942, and my mind's saying, wait, 1942, if I remember correctly, that's where there's an expression that says wars are really good for the stock market. I mean, it just sounds terrible, but that's the way it is. Danny, I'll get to Apple in a moment. And at the same time, it says, if I remember correctly, America went to war a little later than 1942. I think it was maybe 42 or 40. When was Pearl Harbor? So what we're looking at is that whole period. If I remember correctly, the market was doing quite well. Now, I've done this thing on the 1929s, which I'm going to go to first. So here's 1929. If you're looking at Tiger TV, it'll get there. Here's 1929. The market gets to 386.10. The long weekend of September 1929, August the 31st or whatever it is, into September. That's a long weekend. It makes a top. That month, the month of August of 1929, the Empire State Building papers were signed. What's his name? Rockefeller had just signed the papers for a new Rockefeller Center. It's amazing how these tops occur in magnitude at major building highs and complexes. And look what happens. You go straight down. In 2 months, you go to 195.40, down 50%, have a bounce of 52%, and then plunge all the way down to the 1932, a low of 40.60. When were all the bank regulations put in place? 1932. When were they all undone? During the Clinton years. I remember reading against it, saying, how can a bank owner, real estate, how can you have this conglomeration of all these different entities that were separated specifically, and they undid all of those, leading to the Frank Dodd pathetic whatever it is. Right, let's go on. Now, this is 1929. Can you imagine the New York Times headlines? One day I will just take 10 days and I'm going to do nothing else, but I'm going to go through all this stuff and I'm going to produce a paper on this whole thing. If you had read the papers, you wouldn't have bought a single stock throughout the 1930s, except that the Dow went from 40.60 to 196. And this is the low of July of 1932 to the high of March of 1937. 381% gain. So wait a minute, 1942. Okay, so now we're going to be hit by all these taxes, blah, 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 blah. And I'm saying, oh my God, let me just check this out. 1942 was the exact low, 92.69, April of 1942. And we went up, not we, some of us weren't around. The market went up 381% to a peak F top at 213.39. Oh, did I mention that there was a peak G top, an F, and then what's in the Chapman wave methodology, there's a technique that I call, I'll show you right here. You only find the CD on Tiger TV. It's the only place that sells it. And this is called, I'll call it peak G for now, but usually I call it the rare peak G. So let's see what we got. Random extension. There's a rare peak G, but I need to explain it. So let's see where I can explain it. And instant restart. I'm not going to find it. Oh, that was a mistake. Peak G. Keep going. That's what I should have done. Rare peak G. Oh, there it is. In 2005. All right, we went to that particular, peak G. And this is what it is. It's called the smooth peak G, and I explain exactly what it means. What does it mean? It means that you make a peak F, but within 2 bars, usually 3 bars, you go to another high, almost like an extension of this peak F, as if nothing was really happening. F just continued. You didn't even notice a little trough to make the peak at the top. And that's exactly what happened. Makes a wide doji. What is a wide doji? In the Chapman wave methodology, I have a technique that I call the wide doji. And that says that if you have a wide doji, there's a very good chance, and there are a number of things that I look at, but in concept it says, even if you pull back, you will come and revisit the candle that it made, in this case, the open of 174.42 and the close of 174.71, in May of 1937. What does it do? It pulls back to 163.31 and bounces to 189, a 16% gain to where? 189.94. It gets, it's like filling a gap. It touches it and says, okay, goodbye. Hey mom, just going to say goodbye. Bye. And then it's gone. All right, off on its own, and makes this dreaded H pattern that I'm talking about, the M-shaped pattern or the M pattern. So listen, can you imagine the news during the war? And the market went up 381%. So I'm saying to myself, hey, what if we're in the same situation now? What if all this, look at the bad news from March of 2000, what if all these politicians, I'm going to talk politics for a moment. Is anybody? No, nobody's waiting. I cannot believe that Romney hasn't been saying, just as the Republicans had said, what's the name again? The name just flashed by me. Who was going to be who was the vice president-elect for McCain? oh my God, how can I forget her name? Whatever her name is. Why Romney is not saying, do you want Biden for your president a heartbeat away? Do you want Biden who makes a mistake every single day every time he opens his mouth? I just don't understand it. I don't understand why the Democrats aren't saying, we are within 10%. Sarah Palin, thank you. I knew the Den would save me there. And KJS, yep. I can't believe that the Democrats aren't saying, look at your portfolio. We have been working. We've been working very hard. It's silent. I know that you don't want to hear about it. I know that there's a big movement against Wall Street. But Wall Street has basically led to the RTH, that's the REITs, the RTH index, making two round number 45 highs 3 days ago, open and high, and then open and close lower the next on the 10th. That, to me, is just the two simplest things they could have said. I know it's bad. I know that we're in the job recovery. When you've had a housing market that has been decimated so badly in the South, and he's got to say the South and Midwest, he can't talk about the North. He's got to be very specific and honest, and he's going to say, it takes, look at history, it takes a very long time for that kind of recovery. But in all other aspects, we've done our job. It's so simple. Democrats say, Biden, a heartbeat away, is that what you really want? Look what we're offering. We've got a guy who's a budget man who's talking about in your home. Do you allow your budget to? Do you actually have no budget ever? Like we've not had. It's so easy to both. I don't even have to have sides. Just to say, just have a little fun with these. That's all the comments they need to make. Surely, heartbeat away. Biden, a heartbeat away, over and over. You know, like you get these. You get these. When you can overlap everything that's been said every day, and you know the talking points that have been sent out to all these guys, and you hear the same words over and over. What was it with reverence? What was it, the expression that they used? I'm going to get the word in a minute. When someone has dignity, they used to use that word over and over. It hasn't got... And all of a sudden, you never heard the word. Everybody was using it. All right, somebody in the dental will help me there. So this is what I'm saying. The politics, you need only 3 words maximum. Romney has not got any theme that is just 2 to 3 words. Obama has no 2 to 3 words. Romney should say jobs, 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 because you know that when the jobs come back, they're going to come back. Suddenly there's going to be the big flourish of jobs, but it might be after the election. He should be saying jobs, jobs, jobs. There's 3 words, 1 word times 3, like a double top at 45 on the RTH. And the Democrats should be saying, and he should be saying, and then the other crowd, the other Republicans should be saying, Biden, heartbeat away. That's 1, 2, 3 letters, heartbeat away. And the Democrats should be saying, stock market 10% new highs, or they need to say, stock market's back, stock market's back, stock market's back. Make it easy. All right, enough of that. Gravitas. I just knew that somebody would find it. Thank you, Lorna TJ in the Den. Gravitas. Yeah, or no new taxes. Yeah, I mean, it's so easy. That's the way you got it. You got to get it down. Just a couple of words. I'll be back. Basil Chapman, Dow's up 14, S&P's 281. Having a little fun. Larry's show, but I'll be back with the Trade What You See. Larry Pesavento, Basil Chapman sitting here.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman sitting in for Larry Pesavento. I've got a cartoon, one of my cartoons that I had drawn years ago. I had this cartoon series. Actually, I used to be a freelance cartoonist as well, besides doing music and the stock market and stuff. At one point, I used to do the illustrations on the op-ed page of the Globe for quite a while. So this cartoon here says there's this guy and this woman, husband and wife, and this couple, and that's the theme around them. The whole series, in this particular instance, it was the stock market. So, with so much bad news, he says, with so much bad news pervasive this past weekend, the market must have taken it on the chin today. She says, no, it was up. He says, boy, if that isn't in bad taste. Now, that might happen tomorrow. We might get all the news that we were expecting, and instead of doing exactly what you thought, the market does something different. Why? Because the market is a perverse animal. And we've got on the line Victor from Portland, Oregon. Hi, Victor. How are you?
Hi, Basil. I'm doing okay.
Okay, so tell me about your EEM. You still in it?
Yeah, I called last week and I decided to just kind of hang in there with it.
So it dipped a little bit, but it held the 9-period moving average, went above the 200-period moving average, and now it is at, folks, we're looking at EEM, the iShares of the Emerging Market Index. This is really interesting. Why? Because it is making a new recovery high in the daily, so I have to have a parallel wave count of F/B. The weekly chart has made a very quick peak A, B, C, D, still positive. Monthly chart still looks lousy. So now this is the question. I'm going to make it real easy for you. You're in the position. You sat through the little bit of a pullback the other day. It was really just a one-day pullback. Today's Wednesday. I'll be on tomorrow, Thursday, but it won't be, maybe it'll be not in time because it'll be an hour later that we get the news from the Fed. But I'll be on again Friday. So I'm just going to say to you, if there's a gap down, I would not worry about the gap down until midway through whatever period it is. Now, if there's a gap down tomorrow afternoon at 2:45, 40.35 is really the 200-period exponential moving average. But the MACD is still good. And the stochastic in the weekly, the MACD is still good, and the stochastic is good. And the weekly charts are really quite positive, although I've gone to a very quick D. It says you could pull back from that, but there's no major sell signal yet in the EEM. So I'm going to give you the same kind of advice as last time. There's only one difference, and that is, I don't know where your stop would be, but I can tell you that it's at 40.80. If the EEM does close, and I mean it has to close, it can't go there and bounce back, it must close. If it closes under 40.11 is the 9-period exponential moving average. If it closes under 40 in the 39s, I would probably say to you, you know what, at least take something off if you haven't taken it off before then. Why? Because it could pull back all the way to the 39.50 and then the 39.20 area. You can always get back in. If it gaps up, just raise your stop. Hope that helps you, Victor.
Thanks, Basil.
Thank you very much for calling. Basil Chapman sitting in for Larry Pesavento. I'll be back tomorrow at the noontime hour to do his commodities hour. Is that what it's called? Did I forget the name again?